Hey everybody, happy weekend. My name's Stephen Goldman, and we're here with Cannin.com for another technical analysis piece. And what a couple crazy weeks it's been as we've chatted about these fearful markets. Let's jump over to a pricing chart now. GW Pharma, everyone should be aware of this company. FDA approved drugs based in the UK, but a lot of business done in the US. Definitely pursuing the pharma model for cannabinoids. You can see GWPH we're looking at. This is the one, the ticker traded on NASDAQ. And you can see we have some pricing charts going back to early 2020 where we were at about 100. 2020 started pretty promising. We're up about 126, 25, 30% gains. And then, end of February, we can see exactly what happened with all of the flu and oil nonsense. Recently, we've come back a little bit. But how do we read volatility in these markets? You'll see KC, we're looking at the Keltner channels here. That's these blue lines. So the middle blue line is an exponential moving average, and then we're using the average true range to come up with the upper and lower boundaries. So anytime we're above the upper boundary, we would, this is math, so we would expect it to come back down. We can think of this middle line as what it is, an average, right? So when things are above it, we know that they're going to come back down. When things are below it, we know they're going to come back up. And so let's just follow this line. We spent some time above early February into January, definitely above here, and then market corrected itself. Flu scare, volatility. The Keltner channels broaden from their little, they're probably about what is that, 117, $10 wide here. Here they're 103 to 83, so $20 wide. So we doubled in the volatility that we're seeing. And you can see the Hakanashi candles are just much bigger. There's just a lot of fear and movement in these markets. So we know we're spending a lot of time below the lower Keltner channel. We know math tells us that it has to come back up. It has a little bit, but it doesn't really tell us when. So let's add a momentum indicator. This is the MACD, the moving average convergence divergence. We know that the MACD line is this blue line. The signal line is this orange line. The signal line is a longer period. The blue is a shorter period. And then we have this histogram, which just basically is another visual. It's the difference between the MACD and the signal line, and here's zero, so whether it's negative or positive. So you can see here's an example. The MACD crosses above the signal line. That's one of our buy signals. At that cross, right, there's no difference between the MACD and the signal line, so we're right at, the histogram is at zero. And then the difference grows. MACD is bigger and bigger and bigger than the signal line, and you can see these green, 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 and then we turn to light green. We've reached the peak of our bell curve here, and you can see prices are going to come back down. Once they come back down, they have one option, right? Or two options. They can cross below zero, or they can bounce back up above zero. Look what happens here. Green, 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 green. A little bit below, a little bit above, big ones below. That's why it's a good thing to watch for the peaks. Right here, the change from dark to light, that's another signal if you're in a trade to get out of trade, because what's going to happen? Market's going to correct itself and we're going to come back down. So the MACD crossing above the signal is a buy signal. We want to combine that. Maybe that's our entry. What's our exit? Maybe watching for the peak of the histograms here on the MACD, which is actually the the maximum divergence that's possible here. Opposite way, when we see the MACD cross below the signal line, we know that that's a sell signal. So sell, 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 sell. Maybe we got out of it right here. What would that have been? 102. The entry point was 125. That's a great signal in the opposite direction. Here's a nice signal in the positive direction. We can see that in the Keltner channel, we're still below the mean. What's going to happen? We may bounce off this lower boundary, and we'll watch that to see what happens here. The histogram is going to come back to zero. Is the MACD going to cross below the signal line and pricing indicating pricing coming down, and we're going to have a short opportunity, or is it going to bounce and are we going to have a long opportunity? So combine a momentum indicator. Everyone loves the MACD. It's really easy to interpret. Three possible indications. Some are leading, which is nice because some are lagging indicators. But this is the power of combining indicators. I think this tells a really clear picture on GW Pharma, and we'll see if the positivity continues in the market or if we have a little more fear before we actually bounce back. Thank you so much, Cannin.com. My name is Steven. Leave me a comment if you have any questions.